Hello and welcome to Pro Trader Strategies Market Commentary for Monday, November the 26th. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with the economic data. Yeah, that's right. It being a Monday, not generally any economic data to speak of that will really drive the markets, especially here in the United States. One thing that we did have was Mario Draghi speaking earlier this morning. That really didn't do a whole lot to the overall markets. Later on this week, though, we do get pretty good economic data. We get housing starts, crude oil inventories, CPI, I think PPI maybe even later on in the week, and GDP on Wednesday. So pretty good week for economic data. See how the overall economy is doing. Having said that, if you got out of the house on Black Friday, you could see that the economy is probably doing pretty good because it's probably the fullest I've seen the malls in several years. To that point, the wife and I showed up at the local mall here, and we had to park about a half an hour to 45-minute walk away from the mall. Now, when I say away from the mall, I'm talking we weren't even in the parking lot of the mall. We couldn't even get into the parking garage, the parking lot. We had to park across the street in a neighborhood in order to get to the mall. So after driving around a half an hour, 45 minutes, we decided to pull out, go across the street, which is what a lot of other people were doing. So then we had to then find parking over there. So it was a pretty big mess, to be quite honest, but good for retailers. And I have to say that it's probably a good sign for the season ahead. So I'm looking, it seems like people are really out there buying and for this season. So that means the overall economy is looking pretty good. As people are freeing up their wallets, that means that they are pretty confident in the overall economy. Now let's talk about crude oil inventories. Or crude oil, we get inventories later on this week, but some things that we've been seeing is Saudi Arabia really cranking up their output. You know, I don't know if it's because they have this ego thing going on with the United States where we are now surpassing just about everybody in oils per day with the fracking and everything else going on. You know, oil being below $50 a barrel makes that fracking a little bit more difficult up north. So, and even in Texas, so that we might see some slowdown there with it going below 50. That's about the break even on profitability for fracking. But we're getting a nice bit of a bounce today after testing that $50 handle. It looked like it was wanting to go down into that 40 handle. Crude oil inventories this week really should give us a better directional assumption there. With the economics that we've seen, I would have to say that crude oil should drive higher off of demand with all these people that were just driving to the mall, right? No, not just that, but with that being said, I would think that we might get a little bit of a pop here in crude oil. That's why I'm staying in my XOM. I am long XOM, got in a little bit early, but it's finally starting to turn around. All right, let's talk about gold futures. They are unchanged as they're trying to decide whether or not the overall market is done with this sell-off, with the equities anyway. Bonds, similar situation, unchanged for the most part, maybe mid-range, half a point down on the day at any given time. But again, trying to decide what the equities are going to do. And we've got a lot of Fed governors speaking later on this week. They could be poisoning themselves for that, maybe even a bit of a cutback in what they are talking about on interest rate increases going forward. So a GDP later on this week will give us a little bit of an insight to that as well. VIX coming off by a couple of points out of the 20s for the first time in about a week and a half, or about a week anyway. So out of the 20s, but volatility is still here across the board in most equities. There's still a lot of opportunity to sell some premium in there. With the Dow Jones, we can look at this chart setup, and you can see this looks like a nice little bit of a bottom here. Equities as a in regards to NASDAQ and E-mini S&Ps really aren't going to give us this kind of look here, but that's because the day session is taken out, or the overnight session is taken out of the Dow Jones. It's only showing the day session. But reverting back to where the point of control is, that Fibonacci that I was talking about, the extension to 23, all of that lining up is going to draw this market in. NASDAQ was a little overextended to the downside, almost even tested the value area low, which really gives us an indication of it being overdone. Getting a bit of a bounce today. Would like to see it come up in the next couple of days, test the 23 Fibonacci extension that we talked about in the E-mini S&Ps, and that kind of lining up very closely with the NASDAQ is a little bit lower than where the point of control is, but I still believe that it wants to get back into this little area before long. Same with the E-mini S&Ps. They have pushed back above the Fibonacci extension back in this little area where I think that we're going to get comfortable. So a settlement up there would kind of reinforce that thesis that we're going to kind of grind a little bit higher, but not really anything robust by any means. Just get back to that point of control for about a week or so, maybe even until Christmas. You can see with the E-mini S&Ps, overnight inventory got long. Not a whole lot of attempt to flush those longs out, as I think most people that are trading or were out, if you had your eyes open and were out at all this weekend, it seemed like traffic was crazy. People were out and about. That would give me belief that the economy is doing well, the consumer is confident, and this season is going to be a good one. All right, having said that, with Apple, I've just decided, it's at the point of control. If nothing else, it might stay right here. I think if it starts to come off a little bit, I don't really see Apple going much below this $160 a share area. I think that will act as a major support at least. And having said that, that's why I went in and sold the December 160 puts in there for $2.06. So added some more long deltas in my overall portfolio, which is at this point outside of Under Armour, which I'm ready to take off, long deltas. So Under Armour probably and Tesla being the only ones in my portfolio for the most part that are negative deltas. And I'm setting myself up for a bit of a bounce here. As you can see, I've been writing this out for a little bit, and probabilities are pushing me, but not necessarily against me at this point. Still looking pretty good, especially with today's market movement today or so far. But having said that, am looking to get it, like I said, out of the Caterpillar trade that I have on. I have on the 110 puts in there that I'm short, looking to get out of those for close to 50% of my max profit. It's not really that close. I'm probably about 25 cents away at this point, 20 to 25 cents at any given moment. But I decided to put it in there if we got a bit of follow through going forward today. Same thing with XOM. Got a nice bottom here, moved to the top. Again, looking to get out of 50% of my max profit. Not necessarily close right now, but with this market movement today, I decided I needed to put it in an order to capture it. If we test this Fibonacci level, that very well could come into fruition. And in XOM, if you remember, I'm short the 70 puts in there that I'm trying to get out for about 20 cents right now. It's better than 50% of my max profit, but squeezing it out with this robustness we're seeing here in XOM today. And then finally, I think that's about it. Under Armour is the other one that is up and away. As you can see, trading $20.60. I've lowered the basis on what I've shorted this at, or increased where my break even is. I'm short this at 18.5, plus the credits that I've received is closer to 19.5. So a dollar loser right now. I'm getting a little, I'm getting to the point where my assumption here is changing in Under Armour. I don't know that we're necessarily going to go down and try and cover that gap or even get to my $18.50. Got close a couple times, but never really got there. So I might be pulling the ripcord on Under Armour rather soon. That's about it for today. Check out my last couple of webinars. We missed last Thursdays because it was Thanksgiving. Hope everybody had a great Thanksgiving and enjoyed their time with their family. So That being said, we're having a webinar on this Thursday, so check it out at protraderstrategies.com. And that's about it. Give me a thumbs up, thumbs down, like or dislike on this video. If you give me a dislike, let me know what it is that you disliked about it, all right? So if you can't take that, take it easy.